Hey, welcome back traders. Got another ICT lecture today. No fancy title this time, just NQ Futures Review April 1st. So probably just his market analysis on NASDAQ, hopefully not an April Fool's joke. But either way, let's take a look and I'll give you my key takeaways. As always, you can find the original video linked in the description. Please help me out by giving this video a like and subscribing.
Hello folks, welcome back. All right, so we're going to be looking at the Tuesday's price action for NASDAQ for April 1st, 2025. All right, so here's the daily chart, and I'll put the lipstick on that was pertinent to the recent downslide in price action. That's called encroachment of the premium wick, making a high. The draw was the volume imbalance on the daily chart. Market breaks down, attack the relative equal lows there and the relative equal lows there. And then true to form as I was expecting Friday, here's a 15-minute time frame. All right, so you can take a look at the low here. This was 9 o'clock's low during Asia last night. So it's my local Monday evening time, but it's all part of Tuesday's trading. Now, this was yesterday's high inside of regular trading hours. So regular trading hours high, that was where I got the 19,049.75 level, and Asia's low at 9 o'clock or thereabouts, and that's where I got the 19,283.25 level. That's the levels I gave you in the Telegram channel before this morning's regular trading hours began at 9:30 Eastern time. Okay, so I told you that those were the levels to be watching. Those are the things that the algorithm's going to be referring to, and the market did in fact drop down into it and then sent it higher later on to tag it. Now notice inside this shaded area here. Now TradingViews recently added this. Admittedly, I'm not a fan of it, but here it accomplishes the method. So what it is it's showing the shaded area of electronic trading hours and then the resuming of regular trading hours. So regular trading hours is always 9:30 to 4:14, right before 4:15. So 4:15 p.m. Eastern time, regular trading hours close. But electronic trading hours pick up and continue on into the 5 p.m. close Eastern time. And then you have that 1 hour break and we start trading again at 6 p.m. Eastern time. So this high here, notice during the electronic trading hours ahead of 6 a.m. or so, it did in fact take the high out. Whenever that happens, and then we trade back down lower, the opening bell at 9:30 regular trading hours, this is always going to be a high probability candidate to be revisited. Okay, so think about what I put in the Telegram channel this morning. Then look at what we're showing here. Anything that happens in electronic trading hours should be confirmed in regular trading hours. There's a whole lot of significance placed on what happens after the opening bell at 9:30 Eastern time. So if a gap fills that was accomplished inside electronic trading hours, but not in regular trading hours, I'm going to be looking for that gap to be revisited. So even though it may happen in this portion of time, it doesn't matter as much as it does in regular trading hours. So sell side we had defined and buy side we had defined.
I also don't like the background on the extended trading hours. If you want to turn it off, go into your settings. In the symbol section, there's electronic trading hours background. Adjust the opacity to 0% and you'll have it back to the way it was. Okay, so a new key takeaway for me here is if we have a stop hunt prior to 6 a.m., then we go for the other side at 9:30's opening bell. There's a high probability that we'll revisit this initial stop hunt. Now, I wish you would have explained why this is, but this is the ICT power of 3 concept. We have accumulation, manipulation, and distribution. Now, this is the part that every trader seems to get wrong. If you've seen my videos, you'll know I criticize other traders on their power of 3 videos because they only talk about this part of the manipulation stage or Judas swing. But the ICT Judas swing actually has 2 phases. The first phase that no one ever talks about is this buy side sweep. This stop hunt clears out the buy stop, so when the real move happens later, it can run further. So the news at 10 o'clock was just a catalyst for the second manipulation phase, taking out the sell side before the real move happens, and then smart money distributes their position. So if you remember, there are 2 phases to manipulation. You'll be less likely to think that this is the only manipulation up here and that price is going to go lower, but end up getting trapped down here.
So let's go into the 1 minute chart. You can see here at 9:30, electronic trading hours shifts to regular trading hours. And then we have the opening price there. So that is the opening range gap low. And the opening range gap high is the previous settlement price at 4:14 p.m. Eastern Standard Time on a 1-minute chart. And then that's your opening range gap. Half of that is this red line here. That is the consequent encroachment level. And we didn't get a fair value gap form all the way until this candlestick right there. Okay, so that's the very first presented fair value gap. Notice it's on top of the opening range gap high. That's that level here, 19,423.5. Now, I gave guidance this morning in the Telegram channel that as long as we are looking for price below the opening range gap high at 10 a.m. Eastern Time. Why 10 a.m. Eastern Time? 10 a.m. Eastern Time is where we had all of those reports that were due out to release data for PMI and whatever. I can't remember off the top of my head was. But there were several reports that were coming out at the 10 o'clock hour Eastern Time on Tuesday, April 1st, 2025. So as mentioned, that would be the real move. That would start the opening range and utilize the first presented fair value gap. So as you can see at 10 o'clock here, we were below the opening range gap high. Okay, so that means while we can spike up into the first presented fair value gap in blue, because all of the things that have been shown here, we had a short-term high taken out, we rallied above. In other words, we sat above price action being about this high and above the opening range gap high, which was yesterday, Monday's 4:14 p.m. Eastern Time closing price. So it just felt like they were keeping it up there and knocked out anyone that was short that would have made money going down into Asia's low. So the market trades up. Look at the bodies telling the narrative there. You see that? I teach that the wicks are allowed to do the damage. They can color outside the lines, but the bodies were telling me, okay, yeah, I'm on side. I'm right. So I'm going to look for price to start gravitating lower. Now, if I would have been stopped out here, I would have used the consequent encroachment of the opening range gap, which is this level here, and I would have went short on a retest of that. So in other words, we see it leave the opening range gap. This is the low of it, that black line. It leaves it after 10 o'clock news hits, comes back up. It's the consequent encroachment level, which is classic. It's being treated the same way I teach with an inversion fair value gap. When we have a narrative, when we're expecting price to deliver a certain way and start spooling, the PD arrays will be respected just like this. That's the signature you're looking for. Smart money follows that. So the market breaks down lower. We get a fair value gap here. Why is that important? Because it's the first one after moving away from the consequent encroachment level. So we want to see this act as, in some ways, a measuring gap. If you look at essentially the high down to that low, take that range and duplicate it from here down to the low, and you'll get the same range. Okay, so it's like a measured move idea. But this is the gap I said that price should keep NQ lower than this this fair value gap. So this very fair value gap, was the one I initially talked about, and the only one that I mentioned outside of the first fair value gap, that price should stay lower than that, and it should keep price lower. So it offered a premium characteristic, allowing price to touch it and trade lower. And this line right here, the 19,345.75 level, is the old daily low. Okay, the very one I was aiming for after we traded higher into that volume of bounce. I told you it would run to. I have it here just for like a higher time frame reference point because it respected it here. But I mentioned that we would go down here, which is Asia's low. And the market did in fact trade down in there. Got a little busy in here and finally came down and gave me my target and went a little bit lower. And then the sharp reaction off of that is just one of those beautiful things where we get to see the market draw right back up into the counter key level, which was Monday's high, being delivered during regular trading hours. Not during the electronic trading hours over here, but regular trading hours. And you can see that actually happened as well there. And both trades that I used, both the sell side draw and the buy side draw, I keyed off of the first presented fair value gap. First one going down and then going higher. Now, these are intraday scalps. If I were to use a day trading model, I could have done the very same thing by shorting it here and then went long on a reversal below that 19,283 and a quarter, or used this buy side of balance, sell side efficiency with a breaker. So we have low, high, lower low, fair value gap, buy side of balance, sell side efficiency. Couple that together, institutional order flow entry drill, you can get long there. We'll rally from here and back up above that 19,345.75 level. That's the old daily low. That rally from here sends us up into the opening range gap again. Here's the low. This is the consequent encroachment level, and then the high of it. It trades to it and through it and comes right back down, touches what? The midpoint or consequent encroachment of the opening range gap. It is now favorable to go long there. I was watching live streamers, and I was not interested in taking on the trade, but when it got up into here, I was like, well, I'm gonna take it. I'm gonna try to get in there during the first minute fair value gap. And the market trades outside of it, comes back down in again here. I wanted to add, but I said this is enough, and targeted that Monday's high, and trades right up into it beautifully. It actually trades higher.
So he's pretty much just breaking out the logic on his trades. I don't really have very much to add here. Just want to mention that this, he said, was a measuring gap. I would actually look at this as a breakaway gap. We have this like consolidation here after 10 o'clock, and then this was the first fair value gap going away from this consolidation. So I would think this would be a breakaway gap. And as you can see, we did not get filled in this fair value gap. Maybe it could be a breakaway gap and a measuring gap at the same time. Then on the upside, yes, I do see this fair value gap, and I see this breaker with this like unicorn formation. However, if you extend this fair value gap all the way through, you can see price hits it and then starts coming back. So at this point, I would be a little concerned that we could even go lower. If I were to try to go long here, I would not be very confident. I would want to see more of a confirmation. So then price started consolidating up, and once we get a second fair value gap here, this will give me the confirmation and the confidence to go long. Although this is a pretty big fair value gap, so you would have a lot of risk. If you want, you can wait for one more fair value gap, as long as we don't go for the buy side just yet. And we do get another fair value gap here. You could take that, or wait for this one here where it takes out this low. So it's kind of like a little stop hunt, and then price will climb up higher.
All right, so we're trading just below the opening range and inside that first presented fair value gap. I went short there. My stop loss is based on this high right here. I don't believe it's going to go up there. And if it were, I would use this level, as I mentioned earlier, to get short once it trades below it and outside the opening range gap below. So I know I'm pretty solid now because we had one little bump above this candlestick's high. Didn't touch this one, so it's another example of random stop placement. So we're going to look for a close outside of the opening range gap low. There, we got it. Now, I gave a level at 19,314.25. Where that level came from, it's basically my event horizon concept applied to Asian range low at 9 o'clock, and then the old daily lows on the daily chart we aimed for from the volume imbalance, and half of that is this level here. So we trade right back up into consequent encroachment. Again, I wanted to add here, but I was like, no, this is enough. And I want to see it get heavy in here. We left the sell side below here. So we have minor 19,340 sell side, draw to 19,314.25. Now that's your last chance right there. If you weren't short, this is where you think you're short. Now, because it's doing that last chance to get in there, that's when I move my stop to cover cost. Because if it does rally from here, I'm absolutely going to be wrong. And they'll probably would have taken out the high of Monday and then traded down to here. So either one of those levels, it would have been first, and then the second would be the other level. So we break lower again, took out the old daily low at 19,345.75. And they held price in here a lot. And then we have a fair value gap here. I mentioned that. We want to see that price right there, hold price down. In other words, we don't want to see it trade back up in the opening range gap below. So I took a partial there because it's below that block of candlesticks and below the 345.75 level by one tick, but still enough. And it's testing that old daily low. And watch that fair value gap right in here. I don't have it shaded because I'm doing too many things at one time, but I called that out in the Telegram channel. So we tagged it one more time in here. So now we really want to see it become real heavy here. Heavy means we want to see price show a reluctance to want to go higher, but make it real easy for it to go lower. And that's what you're seeing here. And I'll be interested to take a partial off again as price is breaking below the lows here. So there's me taking another partial. So I have 2 contracts left. The stop's been lowered below the consequent encroachment. And as we get lower, if we take out this low in here, I'll take another partial. So that's what I was talking about. I wasn't paying any attention to this chart over here. I wanted you to be able to see everything via a 15-second chart, so you can see the order flow, everything there too. But doing too many things is what happens. And there's a partial again, and I lowered the stop right above the high of that fair value gap, because if it's now going to trade back to it, it's going to go higher. So I would want to be out of that. I'm just submitting the time and letting price do what it needs to do. I stated I'm allowing it to be a little dirty in here, which is what it's doing here. And I'm sure that probably made some of you nervous. You can see nothing changes here on my end. And then what's the consequent encroachment of the wicks is what I send inside of the Telegram channel. You can match this up with the minutes. You can follow the minutes here in the right hand corner and see when I posted what I posted. Everything before the fact, and you'll see the effects of it. Questions all the time. What am I showing up here when I do this tap here versus market open? I want you to focus on the minutes changing, proving that it's not market replay, because you can't do that with market replay. You would be surprised how many people leave comments saying my examples are in market replay, and there's my limit order being filled. Okay, so getting short near the high of the run and exiting in the low, and then ultimately it does start trading higher, it takes out the high and goes to the Monday high, as I mentioned in the Telegram channel. All right, so that's that. And
so I like hearing his commentary on his trade and seeing how he manages his stop loss. I actually took a short this morning as well, although not very impressive. Up here, I contemplated on shorting the first presented fair value gap with my stop at the highs, but I decided to wait for 10 a.m. news because we could spike up to take out the highs one more time. But after 10 o'clock, I saw this fair value gap. Once again, I thought about entering here, but I don't know. I guess I was nervous since we already took out a swing low. But after seeing price move lower, this gave me the confirmation and confidence to short the next fair value gap. But we didn't get any. I actually wanted this volume imbalance, but we didn't retrace back up here either. So kept going lower, and I nearly gave up as price was about to hit the sell side. But then I saw this long wick. So I took a chance here with my entry at 50% of this upper wick and my stop at the high. And I took it off just a few minutes later when the sell side got hit. So not very impressive, but I tell you this because even though it was only a small piece of the total move, it was still a 1 to 2 risk to reward. So if you didn't get in up here, don't feel discouraged and just give up for the day. Keep watching. There still may be opportunities as long as the target has not been reached yet, but you need to be able to read the market well and know where price wants to go. Now, I don't recommend you trade like I did on this day, especially if you haven't developed the skills to read the market. But you can always paper trade to hone your skills and get better. Anyways, that's all for this video. Relatively short, middle of the road in terms of value, but not a lot of fluff, and he does make some good points. But please like this video and subscribe, and until I see you guys next time, safe trading.